The service, called Fidelity Crypto, is tailored to retail customers and lets them trade both Bitcoin and Ether. The service can also be used for custody. Users will be required to keep at least a $1 minimum balance, and while there are no commissions, Fidelity will impose a 1% spread on every trade.
Hello and welcome back to Cryptolenium. As a continuation of the contagion that FTX has spurted, I figured it'd be best that we start with the biggest news of the day, and that is BlockFi has officially filed for Chapter 11 bankruptcy. Take a look at this. We all kind of saw this coming, but they actually released a statement this morning. Maximizing value for all clients and stakeholders, this process will help BlockFi stabilize their business and provide an opportunity to work towards consummating comprehensive restructuring. And so you could see them probably trying to recover assets, and that's exactly what they're doing. As a part of the restructuring efforts, we will focus on recovering all obligations owed to BlockFi by counterparties, including FTX. So let's see what they're going to do. Acting in the best interest of our clients is our top focus and continues to guide our path forward. Chapter 11 is a transparent process that will continue to communicate with our clients to ensure they hear directly from us. And if you're interested in a detailed breakdown of this bankruptcy filing, they've provided it on their Twitter page. I'm sure you can find it on their website. But moving forward, a little bit more detail in this. And we can thank some of the Twitter community for this. So BlockFi lists its estimated assets and liabilities in the range of 1 to 10 billion in the filing. And they're making steps to liquidate a lot of its cryptocurrency, or they already took steps to liquidate a lot of its own cryptocurrencies to bolster available cash to fund its business and administrative costs. So as you could see, they've already been preparing for this. They have set measures in case of this and the worst happened. So through this process, BlockFi was able to raise 238 million of additional cash for a total unencumbered cash position of 256 million. So they sold a bunch of crypto, as you can see, to recover this amount. So obviously their liabilities tremendously outweigh their assets, and because of this, bankruptcy is going to lead them into suing Sam Bankman-fried over shares in Robinhood that FTX founder allegedly pledged as collateral earlier this month. So just hours after filing for bankruptcy protection, BlockFi on Monday sued Sam Bankman-Fried's emergent Fidelity Technologies vehicle, demanding he turn over unspecified collateral BlockFi says it owned. So to add to the details of this, through this latest lawsuit, BlockFi was reportedly seeking turnover of collateral as a part of the pledge agreement from November 9th. Apparently, Emergent agreed to a payment schedule with BlockFi that has not been met. So it was also revealed that SBF was trying to raise funds by selling off his Robinhood shares after entering a collateral agreement with BlockFi. It should be noted that this was before the downfall of FTX. So who knows if he's made other plans for those assets? Who knows? I mean, maybe BlockFi will end up recovering that. And adding to this market pressure is a Fed statement. We will have to maintain sufficiently high interest rates throughout 2023 and 2024. So earlier today, Bullard, Fed has a ways to go in interest rate hikes. This is going to be rough on us, and this is why many are saying, and many are probably going to be right about the fact that we still have a ways to go down, especially for Bitcoin, especially for altcoins. So to dig into this, Federal Reserve needs to raise interest rates quite a bit, and through the next year into 2024 to gain control of inflation, bring it back down to the bank's 2% goal. St. Louis Fed President James Bullard said today. He said, "We've got a ways to go to get restrictive." In an interview he said with Market Watch, he restated his conviction that the Fed's target policy rate needs to raise to at least a range between 5% and 5.25 from the current level of 3.75 to 4% to be sufficiently restrictive. So once at a high enough level, rates would have to would then have to stay there all during 2023 and into 2024, given the historical behavior of inflation. So if they stay high, getting into this situation, it's going to hurt the market, of course. But once those rate hikes stop, because the market is forward thinking, expect a recovery prior to the end of this. So yes, it's scary to think that interest rates are going to be extremely high for the next 2 years, possibly, but that doesn't mean that risk on is going to be in the same position that it's in right now. So keep that in mind. Still have a ways to go, but we also may sit for a while after that too. And in relation to this, a little bit better news. So Fidelity begins opening retail Bitcoin trading accounts. So one of the world's largest financial providers has officially started opening retail Bitcoin trading accounts for the public. And this development comes after their announcement of a waitlist previously this month, according to the block. So they've faced a lot of criticism, and a lot of people told them not to do this, especially in this climate. So despite the warnings, Fidelity appears to be diving headfirst into Bitcoin. As interest in Bitcoin amongst the traditional finance community continues to grow, it should be noted the move comes at a particularly interesting time, given the developments surrounding the collapse of FTX and the heightened attention being paid to volatility in the industry. The funny thing is the ratio of volatility, or the volatility actually of Bitcoin, has performed better than the volatility of the stock market. And so that is telling you something about where we're headed and what Bitcoin is going to be deemed as we continue with inflation, because inflation will never go away. It'll only slow down. And before we go, I figure it's a good time to take a look at good old Bitcoin. As you can see, we're a little bit higher than where we've been the last few days. Last 2 days, we hovered down towards, 16,000 flat after hanging out at 16.5. As you can see, we're coming up a little bit. It's best to just watch every few hours, see where we're going, see what unfolds. And of course, check our updates, because we will be covering this day to day and letting you know the most important developments. This has been Cryptolenium. Thanks for tuning in.